Alright everyone, and welcome back to the channel for another Bitcoin update. So in the last episode we uploaded on the channel the huge warning for Bitcoin. We talked about everything from the TA in the immediate short term to the long term, what price targets to expect and what is going on. In this episode we're going to leave our TA hats at the door and jump into some on-chain metrics, as I see the Bitcoin active addresses having a colossal spike to the upside right now, and this is a very worrying signal. So let's jump right into this. Now, if you're new to the channel, you might be wondering a few things. Number one, what are active addresses? And number two, why is a spike in active addresses bad? Well, let's talk about this. So number one, what are active addresses? Well, this is actually a Glassnode chart over on TradingView, and Glassnode define the Bitcoin active addresses as the unique number of Bitcoin addresses that were active in the network either as a sender or a receiver. So for example, if you receive cryptocurrency on your Coinbase wallet, or if you receive cryptocurrency on your Ledger, your Trezor, your hardware wallet, that will become a receiver wallet. And let's say you want to take some profit, so you send your cryptocurrency from a hardware wallet to a centralized exchange. That wallet that you've sent it from, the hardware wallet, will now become a sender wallet. So what you can imagine how this is bearish for the price is typically when the BTC USD price spikes, this is when people want to sell their cryptocurrency. So as you can imagine, if we look at this chart here, what we've got is the Bitcoin active addresses with this blue line on the top, and we've got the BTC USD price in orange at the bottom. And you can see these tops in the active addresses beautifully correlate to the tops in the Bitcoin price action. You can see over here we had a top in the active addresses literally on the day, the week that this was about to start colliding to the downside. And you can imagine this as what was happening was people were sending their Bitcoin from, their Trezors, their Ledgers. They were sending Bitcoin from their hardware wallets onto exchanges, and then what they did from those exchanges is they liquidated, and that is why these active addresses were spiking. People are taking profits, people are moving their cryptocurrency around, and this typically happens a lot towards the top of the markets. Now, you can see basically every peak in the price action can correlate to a spike in the active addresses. This one is slightly different because we actually peaked here while the active addresses were moving up, and the active addresses continue to become a little bit more active. So in this phase, you could probably imagine people sent their cryptocurrencies to centralized exchanges after the price was going to the downside to liquidate, and ever since they've just been getting more and more active. And what you'll notice is, once again, since these regions, you've got a spike in active addresses. The top is going to be near in the local time frame. You've got a spike in active addresses. The price is going to continue to move to the downside because people are sending their Bitcoin to exchanges. This was happening during a dump. So the Bitcoin price was dumping, people got scared, they sent their crypto to exchanges, they liquidated, and as you can see, the cascade continues. As the active addresses return to their norm, or as they return to this kind of like red stationary box round at the bottom of the market cycle, you can see this is where everything starts to chill out for the active addresses. And when the active addresses aren't that active, that is normally when the bottom is in. I think we've done a good enough job. We don't need to look at every single peak that's ever happened in the price action and correlate it to this. But as you can see, spikes in active addresses are not good for the price action. And at this moment in time, we've got another massive wick to the upside. If I look at my trading view, you can see it's up about 11% on the daily, which comes to no surprise because Bitcoin is absolutely nosediving once again. And like we said, a spike in active addresses, meaning active addresses are up almost 11% today. People are obviously moving their crypto around, and as we can see by the price action, they're sending it to centralized exchanges of some sort to liquidate. Now, what I would like to say is why this is a bearish omen or a bearish signal right now is the price action is drastically moving to the downside, and the active addresses are spiking into this. And the last couple of times this has happened, namely being here and here, the capitulations just absolutely continue to happen within the next week, within the next couple of weeks. So be super cautious. Really just a quick video letting you know. I mean, this kind of tells you what you already know. This could top out at any moment, but in my opinion, I would not be fighting this trend. I would be looking to accumulate Bitcoin as the active addresses return to this red box, as the active addresses become a little bit more chill. And once again, I mean, if we zoom in here and find the bottom for Bitcoin, the bottom was down here, 10th of December 2018. And if we correlate this to the active addresses, this was round about here, 10th 2018. Literally right here. As you can see, the active addresses were really, really low. They were around about this region. So when the active addresses go for their next leg back down to the downside, we can definitely say that momentum is definitely starting to subside as active addresses go back down. I imagine it's going to be a key sign that there's not going to be too many people left to continue selling their cryptocurrency. Now, I've done a deep dive in some of the other on-chain metrics like addresses, address sizes. Not too much to report, but look into Bitcoin, what I do want to wrap up this video on is one final chart that I want to spend 10 seconds on. This is the Bitcoin wallet sizes that hold more than 1,000 BTC, also known as smart money, whales, institutional money, the people that you want to follow. I'm not going to deep dive into this chart because we've done this many times before. You can see this is highly inversely correlated to the price action because they love to DCA in as the price goes down and they love to DCA out as the price goes up, and they do a great job of calling the market bottoms when they start to drastically accumulate, like round here. The bottoms are in for the market structure over on Bitcoin. And if we refresh the chart right now, what you can actually see is, whales are not buying. They're really not bothered. I mean, the lows were down here, 2,142 addresses. There's 2,147 right now. So whales at this moment in time are not interested, or should I say people who are not yet whale status, not yet the status quo of a whale, aren't accumulating back into the market right now. So we've got a lot of people with a large amount of money on the sidelines. If you do look at the lower addresses, the people who hold less than 1 Bitcoin, 10 Bitcoin, they are steadily accumulating. So retail is gobbling this dip up. Smart money, whales, they're sitting on the sidelines, which should definitely tell you something. That's all I've got for you today for this little episode on the active addresses. As always, my friends, Cowboy out. Peace.